Question 1. Stakeholder feedback indicates that some clients are frustrated when their disability claims are denied due to policy exclusions they were not fully aware of. In such a situation, a client expresses dissatisfaction and asks you, as their group benefits disability specialist, to find a way to get the claim approved, implying a willingness to stretch the interpretation of policy terms. What is the most ethically sound and professionally responsible approach to manage this situation? Option A. Clearly explain the policy's specific exclusions and limitations that led to the claim denial. Provide a detailed rationale based on the policy wording and applicable regulations, and offer to explore any legitimate alternative avenues for support or review that are within the policy's framework or available through other company or external resources. Option B. Politely inform the client that claim denials are solely the insurer's decision and that your role is limited to explaining the policy, offering no further assistance or exploration of options beyond the initial explanation. Option C. Agree to advocate for a broader interpretation of the policy's terms, suggesting that the insurer might be persuaded to overlook certain exclusions given the client's circumstances, and initiate a formal appeal process with this persuasive argument. Option D. Advise the client that the policy is inadequate for their needs, and immediately begin the process of researching and recommending alternative disability insurance providers and policies that might offer better coverage. The correct answer is A. Clearly explain the policy's specific exclusions and limitations that led to the claim denial. Provide a detailed rationale based on the policy wording and applicable regulations, and offer to explore any legitimate alternative avenues for support or review that are within the policy's framework or available through other company or external resources. Explanation. This scenario is professionally challenging because it pits the immediate financial interests of a client against the long-term ethical obligations of a group benefits disability specialist, GBDS. The GBDS must navigate the pressure to retain business while upholding their fiduciary duty and adherence to professional standards. The core conflict lies in balancing client satisfaction with the integrity of the advice provided, particularly when that advice might be unpopular or perceived as unhelpful by the client in the short term. The correct approach involves prioritizing transparency and education regarding the limitations and conditions of the disability policy. This means clearly explaining to the client that the policy's terms, as written and approved by regulators, do not cover the specific situation they are experiencing. The GBDS must then offer to explore alternative solutions within the bounds of the policy or suggest other avenues for support, such as employee assistance programs or external resources, without misrepresenting the existing coverage. This aligns with the ethical principles of honesty, integrity, and acting in the best interest of the client by providing accurate information and managing expectations appropriately, as mandated by professional codes of conduct for insurance specialists. An incorrect approach would be to agree to misrepresent the policy's terms, or to suggest that the insurer might overlook specific exclusions. This is ethically unsound as it involves deception and undermines the regulatory framework governing insurance products. It violates the duty of honesty and could lead to regulatory sanctions, loss of license, and damage to the GBDS reputation and the reputation of their firm. Another incorrect approach would be to dismiss the client's concerns without a thorough review or explanation. The policy may not cover the situation. A lack of empathy or a perfunctory response can damage the client relationship and fail to uphold the professional standard of providing clear and understandable guidance. This approach neglects the ethical obligation to communicate effectively and support clients through complex situations. A third incorrect approach would be to immediately suggest terminating the policy and seeking a new provider, without first exhausting all avenues to explain the current policy's limitations and explore any potential, albeit unlikely, avenues for coverage or alternative support. This could be seen as prioritizing a potential commission from a new sale over fulfilling the ethical obligation to the existing client and providing comprehensive advice based on the current contractual agreement. The professional decision-making process should involve a structured approach. First, thoroughly understand the client's situation and their understanding of the policy. Second, meticulously review the policy's terms and conditions, paying close attention to exclusions and definitions. Third, communicate the findings clearly and empathetically to the client, explaining the rationale behind the policy's limitations. Fourth, Explore all legitimate options for assistance, whether within the policy or through external resources. Finally, document all communications and decisions thoroughly. This process ensures that advice is accurate, ethical, and client-centered, adhering to professional standards and regulatory requirements. Question 2. The assessment process reveals that a group disability insurance policy is now subject to a new facultative reinsurance agreement. The GBDS is tasked with ensuring the smooth integration of this reinsurance arrangement into the existing disability program's operations. Which of the following actions best demonstrates a proactive and compliant approach to managing this integration? Option A. Focusing solely on meeting the data reporting requirements of the facultative reinsurer, even if it means temporarily delaying the processing of employee disability claims to gather the necessary information. Option B. Reviewing the facultative reinsurance agreement to identify specific clauses that dictate claims handling procedures, benefit eligibility criteria, or reporting obligations, and then assessing the current operational workflows and systems for any necessary adjustments to align with these reinsurance terms, followed by transparent communication with the employer group regarding any material changes. Option C. Implementing immediate changes to the disability benefit payout structure to align with the insurer's perceived cost-saving opportunities presented by the facultative reinsurance agreement, without consulting the employer group or the reinsurer. Option D. Assuming the facultative reinsurance agreement is a purely financial arrangement that does not necessitate any changes to the existing claims adjudication or benefit administration processes for the group disability program. The correct answer is B. Reviewing the facultative reinsurance agreement to identify specific clauses that dictate claims handling procedures, benefit eligibility criteria, or reporting obligations, and then assessing the current operational workflows and systems for any necessary adjustments to align with these reinsurance terms, followed by transparent communication with the employer group regarding any material changes. Explanation. This scenario is professionally challenging because it requires a group benefits disability specialist, GBDS, to navigate the complex interplay between a disability insurance program's design and its reinsurance arrangements, specifically concerning the implementation of a new reinsurance treaty. The challenge lies in ensuring that the operational changes necessitated by the reinsurance agreement do not inadvertently compromise the benefits or service levels promised to the employer and their employees, while also adhering to the specific terms of the reinsurance contract and relevant regulatory guidelines. The GBDS must balance the insurer's financial risk management objectives with the policyholder's contractual rights and expectations. The correct approach involves a thorough review of the new reinsurance agreement to identify any clauses that directly impact claims handling, benefit administration, or policyholder communication processes for the disability program. This includes understanding how the reinsurance treaty defines covered claims, retention levels, and reporting requirements. The GBDS must then proactively assess the current operational procedures and systems to determine if modifications are needed to align with the reinsurance terms. This might involve updating claims adjudication guidelines, adjusting reserve calculations, or implementing new data reporting mechanisms to the reinsurer. Crucially, any proposed changes must be communicated transparently to the employer group, explaining the rationale and any potential impact on their plan, ensuring compliance with disclosure requirements and maintaining trust. This proactive, detail-oriented, and transparent approach is justified by the GBDS fiduciary responsibility to both the insurer and the policyholder, ensuring that the reinsurance arrangement supports, rather than undermines, the disability program's integrity and the employer's benefit objectives, all within the bounds of applicable insurance regulations that govern contract administration and policyholder rights. An incorrect approach would be to assume that the reinsurance agreement has no direct impact on the day-to-day administration of the disability program, and to proceed with existing operational procedures without any review. This failure to assess the operational implications of the reinsurance treaty could lead to non-compliance with the treaty's terms, potentially resulting in disputes with the reinsurer and financial repercussions for the insurer. Ethically, it also risks misrepresenting the plan's administration to the employer group if changes are made without their knowledge or understanding. Another incorrect approach would be to implement changes to the disability program's administration solely based on the insurer's internal cost-saving objectives derived from the reinsurance agreement, without adequately considering the impact on benefit payouts or service levels for the insured employees. This would violate the principle of acting in the best interest of the policyholder and could lead to a breach of contract if benefit provisions are negatively affected. Regulatory frameworks often mandate that changes to group benefit plans must be communicated clearly and that benefits provided must align with the policy terms. A third incorrect approach would be to prioritize the reinsurer's reporting requirements over the established claims adjudication processes, leading to delays or inconsistencies in benefit payments to employees. While reporting to the reinsurer is important, it should not compromise the timely and accurate delivery of benefits as stipulated in the primary disability policy. This could lead to regulatory scrutiny and dissatisfaction among the insured population. The professional decision-making process for similar situations should involve a systematic review of all relevant documentation, including the primary disability policy, the reinsurance agreement, and any applicable regulatory guidance. The GBDS should then conduct a gap analysis between current operations and the requirements of the reinsurance treaty, identifying potential areas of conflict or necessary adjustments. Stakeholder engagement, including communication with the employer group and internal claims and underwriting departments, is crucial to ensure alignment and transparency. Finally, any implemented changes must be monitored for effectiveness and compliance. Question 3. The review process indicates a claimant receiving benefits under a group long-term disability policy has also applied for and is awaiting a determination on Social Security Disability Insurance (SSDI) benefits and has received a settlement from a workers' compensation claim. The group policy contains a standard coordination of benefits provision that offsets other income benefits. What is the most appropriate next step for the group benefits disability specialist to ensure accurate benefit integration? Option A. Advise the claimant that the group disability benefits will be suspended until SSDI is approved and the workers' compensation settlement is fully accounted for, as per policy terms. Option B. Inform the claimant that their group disability benefit will be reduced by an estimated amount based on typical SSDI and workers' compensation offsets, and adjustments will be made later. Option C. Request detailed documentation from the claimant regarding their SSDI application status and the final settlement details of their workers' compensation claim to accurately calculate any applicable offsets against the group disability benefit. Option D. Proceed with paying the full group disability benefit amount while awaiting the SSDI determination, assuming the workers' compensation settlement will be fully offset without further investigation. Correct answer is A. Advise the claimant that the group disability benefits will be suspended until SSDI is approved and the workers' compensation settlement is fully accounted for, as per policy terms. Explanation. This scenario is professionally challenging because it requires a group benefits disability specialist, GBDS, to navigate the complex interplay between a private group disability plan and multiple government-sponsored benefits. The core challenge lies in ensuring accurate benefit integration without overpaying benefits or violating the terms of the group policy or statutory requirements. A GBDS must possess a thorough understanding of the coordination of benefits, COB, provisions within the group policy, and the specific rules governing Social Security Disability Insurance, SSDI, workers' compensation, and any applicable state disability insurance, SDI, programs within the relevant U.S. jurisdiction. The correct approach involves meticulously reviewing the group disability policy's COB clause to understand how it mandates integration with other income sources. This typically requires obtaining all necessary documentation from the claimant regarding their SSDI, workers' compensation, and SDI applications and awards. The specialist must then apply the policy's specific offset provisions, ensuring that the total disability benefits received by the insured do not exceed the benefit amount stipulated in the group policy, after accounting for any policy exclusions or limitations. This adherence to the policy's COB provisions and the accurate application of offsets are critical for complying with contractual obligations and preventing overpayments, which could lead to financial recovery actions by the insurer. An incorrect approach would be to simply accept the claimant's self-reported benefit amounts without independent verification. This fails to uphold the contractual obligation to coordinate benefits as outlined in the policy and could result in the insurer paying benefits in excess of what is contractually due. Another incorrect approach is to assume that all government benefits are fully offset without verifying the specific offset language in the group policy. Different policies may have varying rules regarding how certain government benefits are treated, and a failure to adhere to these specific provisions constitutes a breach of the policy terms. Furthermore, failing to investigate potential duplicate benefits across different government programs, e.g., if SSDI and workers' compensation overlap in a way not fully accounted for by the policy COB, would be an oversight that could lead to improper benefit payments. The professional decision-making process for similar situations should involve a systematic approach. 1. Understand the group policy. Thoroughly review the group disability policy, paying close attention to the coordination of benefits (COB) and offset provisions. 2. Gather information. Collect all relevant documentation from the claimant regarding their claims for SSDI, workers' compensation, and SDI. This includes application status, award letters, and benefit payment details. 3. Verify information. Independently verify the benefit amounts and effective dates of any government benefits received or awarded. 4. Apply policy provisions. Apply the specific offset calculations as dictated by the group policy COB clause to determine the correct amount of group disability benefit payable. 5. Communicate clearly. Inform the claimant of the benefit integration process and the resulting benefit amount, providing clear explanations. 6. Document thoroughly. Maintain detailed records of all information gathered, calculations performed, and communications with the claimant and other parties. Question 4. Quality control measures reveal that a group benefits disability specialist is managing a claim or the claimant has reported a severe back injury preventing them from working. However, initial review of submitted documentation shows some inconsistencies between the claimant's reported limitations and information from a recent non-work-related insurance application. The specialist is considering several approaches to proceed with the investigation. Which of the following approaches best aligns with regulatory requirements and professional best practices for claims management in the U.S.? Option A. Immediately initiate surveillance to document the claimant's daily activities and compare it to their reported limitations. Option B. Deny the claim based on the initial inconsistencies observed, citing insufficient evidence of disability. Option C. Request a comprehensive medical report directly from the claimant's treating physician, ensuring proper authorization from the claimant is obtained. Option D. Accept the claimant's self-reported limitations at face value and proceed with approving the claim without further investigation. The correct answer is A. Immediately initiate surveillance to document the claimant's daily activities and compare it to their reported limitations. Explanation. This scenario is professionally challenging because it requires a group benefits disability specialist, GBDS, to balance the insurer's need for accurate information with the claimant's right to privacy and timely benefit processing, all within the strict confines of U.S. federal and state disability insurance regulations. The specialist must navigate potential conflicts of interest and ensure that investigative practices are both effective and compliant. The correct approach involves a systematic, evidence-based investigation that prioritizes obtaining necessary medical information directly from the claimant's treating physician, while respecting privacy laws and contractual obligations. This approach ensures that the claim is assessed fairly and accurately based on objective medical evidence, which is a core requirement of disability insurance claims management. Regulatory frameworks such as HIPAA govern the disclosure of protected health information, and claims handling standards mandate prompt, fair, and equitable investigation and resolution of claims. Obtaining consent from the claimant for the release of medical records is a fundamental ethical and legal step. An incorrect approach that relies solely on surveillance without first attempting to gather medical information directly from the treating physician is problematic. This bypasses the primary source of medical evidence and can be perceived as adversarial, potentially damaging the claimant-provider relationship and failing to gather the most relevant information for determining disability. It may also violate privacy regulations if surveillance is conducted in a manner that infringes on the claimant's reasonable expectation of privacy. Another incorrect approach, which is to immediately deny the claim based on a single piece of conflicting information without a thorough investigation, is a direct violation of fair claims handling practices. Regulations typically require insurers to conduct a complete and impartial investigation before making a coverage decision. This approach fails to gather all necessary facts and can lead to wrongful claim denials, resulting in regulatory penalties and legal action. Finally, an incorrect approach that involves accepting the claimant's self-reported information without any independent verification or medical review, especially when there are indicators of potential discrepancies, is also professionally unacceptable. While claimants should be treated with respect, insurers have a fiduciary duty to manage claims responsibly and prevent fraudulent payouts. This approach neglects the insurer's obligation to investigate and verify the validity of the claim, potentially exposing the insurer to financial risk and undermining the integrity of the disability insurance system. The professional decision-making process for similar situations should involve 1. Acknowledging the claim and initiating communication with the claimant. 2. Reviewing the submitted documentation and identifying any immediate gaps or inconsistencies. 3. Developing a clear investigation plan that prioritizes obtaining relevant medical evidence, including obtaining claimant consent for record release. 4. Conducting the investigation in a manner that is compliant with all applicable privacy laws and fair claims handling regulations. 5. Evaluating all gathered evidence objectively to make a coverage determination. 6. Communicating the decision clearly and promptly to the claimant, providing specific reasons for approval or denial, and outlining appeal rights. Question 5. Assessment of the following scenario. An employee who has been covered under a group long-term disability insurance policy for 3 years recently experienced a severe accident that has rendered them unable to perform their regular job duties. The employee, who initially designated their sister as the beneficiary, informs their HR department that they are now married and wish for their new spouse to be the beneficiary. The employee also expresses concern about their ability to meet the policy's definition of disability. The HR department is unsure how to proceed regarding the beneficiary change and the disability claim. Which of the following approaches best addresses the situation in accordance with Group Benefits Disability Specialist Guidelines? Option A. Advise the employee that their spouse is automatically the beneficiary due to their recent marriage and proceed with processing the disability claim based on the provided medical information. Option B. Guide the employee through the plan's formal process for changing their beneficiary designation, while simultaneously initiating the disability claim review based on the employee's medical condition and the policy's definition of disability, irrespective of the beneficiary status. Option C. Recommend that the employee first finalize their beneficiary change with the insurer before the disability claim can be formally processed, as the beneficiary designation is a prerequisite for claim evaluation. Option D. Inform the employee that beneficiary designations can only be changed during open enrollment periods and that the disability claim will be evaluated based on the existing beneficiary designation. Correct answer is A. Advise the employee that their spouse is automatically the beneficiary due to their recent marriage and proceed with processing the disability claim based on the provided medical information. Explanation. This scenario presents a professional challenge due to the interplay of eligibility, enrollment, and beneficiary designation within a group benefits disability plan, particularly when an employee experiences a life-altering event. The core difficulty lies in ensuring that the employee's rights and the plan's provisions are correctly applied, balancing the employer's administrative responsibilities with the employee's entitlement to benefits and the sanctity of beneficiary designations. Careful judgment is required to navigate potential ambiguities and ensure compliance with the Group Benefits Disability Specialist (GBDS) regulatory framework. The correct approach involves a thorough review of the plan documents, specifically the eligibility criteria for disability benefits and the procedures for beneficiary designation changes. It requires understanding that once a beneficiary is properly designated according to plan rules, that designation generally remains in effect unless formally changed by the insured. The approach should prioritize confirming the employee's eligibility for disability benefits based on the plan's definition of disability and the timing of the onset of their condition relative to their coverage. Furthermore, it necessitates verifying the beneficiary designation on file with the insurer and communicating clearly with the employee about the process for updating it if desired, while respecting the existing designation until a valid change is made. This aligns with the ethical obligation to act in the best interest of the plan participant and adhere strictly to the terms of the insurance contract and applicable regulations governing group benefits. An incorrect approach would be to assume the employee's stated intent to change beneficiaries overrides the existing, properly filed designation, without following the plan's formal amendment process. This fails to respect the contractual nature of the beneficiary designation and the insurer's reliance on the filed documentation. Another incorrect approach would be to deny disability benefits solely based on the employee's marital status or a perceived informal change in beneficiary, without a thorough assessment of the plan's definition of disability and the employee's medical condition. This disregards the primary purpose of disability insurance and potentially violates regulations protecting insured individuals. A third incorrect approach would be to advise the employee that their spouse is automatically the beneficiary due to marriage, without confirming the actual designation on file. This misinterprets beneficiary rules, which are typically governed by the specific designation made by the insured, not by marital status alone. The professional decision-making process for similar situations should begin with a comprehensive understanding of the specific group benefits plan documents, including the certificate of insurance and summary plan description. This should be followed by a meticulous review of the employee's enrollment and coverage history. Next, the professional must consult the relevant regulatory framework governing group benefits and disability insurance to ensure all actions are compliant. Communication with the employee should be clear, accurate, and focused on explaining their rights and the plan provisions. If there is any ambiguity, seeking clarification from the plan sponsor or the insurance carrier is paramount. The ultimate goal is to ensure fair and equitable treatment of the employee, while upholding the integrity of the insurance contract and regulatory requirements. Question 6. Upon reviewing the initial proposal for a new employee wellness program, a benefits specialist notes that the proposed components are largely based on popular wellness trends and a general assumption of employee needs. The specialist is concerned that this approach may not effectively address the specific health challenges and interests of their organization's diverse workforce, nor will it provide a clear framework for measuring success. What is the most appropriate next step for the benefits specialist to ensure the program's design is effective and aligned with employee needs? Option A. Focus on adding more high-visibility, low-cost activities to the program to maximize employee participation and create a positive impression, even if they don't directly address identified health risks. Option B. Conduct a comprehensive needs assessment utilizing a variety of data sources, including health risk appraisals, employee surveys, and claims data analysis, to identify specific health priorities and interests, and then use this information to set measurable program goals and select relevant program components. Option C. Proceed with implementing the proposed program as it reflects current industry best practices and is likely to be well received by employees due to its popular offerings. Option D. Revise the program's overarching goals to be more aspirational and less specific, allowing for greater flexibility in the types of activities that can be included without strict adherence to measurable outcomes. The correct answer is B. Conduct a comprehensive needs assessment utilizing a variety of data sources, including health risk appraisals, employee surveys, and claims data analysis, to identify specific health priorities and interests, and then use this information to set measurable program goals and select relevant program components. Explanation. This scenario presents a common implementation challenge in wellness program design, balancing the desire for broad appeal and perceived value with the need for targeted interventions that address specific, identified needs within a diverse employee population. The challenge lies in moving beyond generic offerings to create a program that is both effective and demonstrably beneficial, thereby justifying its investment and ensuring employee engagement. Careful judgment is required to avoid programs that are superficial, fail to resonate with employee needs, or inadvertently exclude certain groups. The correct approach involves a thorough needs assessment that utilizes a variety of data sources to understand the health risks, interests, and barriers to participation among the employee population. This data then informs the setting of specific, measurable, achievable, relevant, and time-bound, SMART goals for the program. Program components are then designed to directly address the identified needs and contribute to achieving these goals. This data-driven, goal-oriented design ensures that the wellness program is relevant, impactful, and aligned with the employer's objectives for employee health and productivity. From a regulatory and ethical standpoint, this approach promotes fairness and equity by ensuring that program design is based on objective data rather than assumptions, and that resources are allocated effectively to address genuine needs. An incorrect approach would be to design a program based solely on popular trends or what competitors are offering without first understanding the specific needs of the employee population. This fails to establish a clear link between program components and desired outcomes, making it difficult to measure success or justify the program's value. Ethically, it risks wasting employer resources and employee time on initiatives that may not be beneficial. Another incorrect approach would be to focus exclusively on high visibility, low-impact activities that are easy to implement, but do not address underlying health risks or employee well-being concerns. This approach neglects the critical step of needs assessment and goal setting, leading to a program that may appear comprehensive but lacks substance and demonstrable impact. This can lead to employee disengagement and a perception that the program is a superficial gesture. A further incorrect approach would be to design a program with broad, aspirational goals that are not supported by specific, measurable objectives or targeted interventions. Without a clear roadmap derived from a needs assessment, the program's components may be disconnected and unlikely to achieve meaningful results. This can result in a lack of accountability and an inability to demonstrate the program's return on investment. The professional decision-making process for similar situations should begin with a commitment to a data-driven approach. This involves actively seeking and analyzing information about the target population's health status, lifestyle factors, and preferences. This assessment should then be used to define clear, actionable goals. Finally, program components should be strategically selected and designed to directly contribute to achieving these goals, with mechanisms for ongoing evaluation and adaptation. This systematic process ensures that wellness initiatives are not only well-intentioned, but also effective, ethical, and aligned with organizational objectives. Question 7. The monitoring system demonstrates that a client's business travel accident insurance policy has been in place for several years, and the employer's travel patterns have recently diversified to include more international destinations and high-risk regions. What is the most appropriate action for the Group Benefits Disability Specialist, GBDS, to take regarding this policy? Option A. Conduct a comprehensive review of the current business travel accident insurance policy to ensure its terms, conditions, and coverage limits align with the employer's updated travel patterns and risk profile, and advise on any necessary adjustments or endorsements. Option B. Focus on negotiating a lower premium for the existing policy, given its long-standing nature and the absence of claims, to maximize cost savings for the employer. Option C. Advise the employer to discontinue business travel accident insurance altogether, as the increased risk associated with diversified travel might make it prohibitively expensive. Option D. Assume the existing policy adequately covers the diversified travel patterns, as it has been in force for several years without any reported claims. The correct answer is A. Conduct a comprehensive review of the current business travel accident insurance policy to ensure its terms, conditions, and coverage limits align with the employer's updated travel patterns and risk profile, and advise on any necessary adjustments or endorsements. Explanation. This scenario is professionally challenging because it requires a Group Benefits Disability Specialist, GBDS, to navigate the complexities of business travel accident insurance, specifically concerning coverage for employees traveling on business. The GBDS must ensure that the policy accurately reflects the employer's risk exposure and provides appropriate benefits to employees, while also adhering to the specific regulatory framework governing such policies within the relevant jurisdiction. The challenge lies in interpreting policy terms, understanding the scope of coverage, and advising the employer on potential gaps or enhancements, all within the confines of applicable laws and guidelines. The correct approach involves a thorough review of the business travel accident insurance policy, cross-referencing its provisions with the employer's stated travel policies and the nature of the business operations. This includes verifying that the policy clearly defines what constitutes business travel, the geographical limits of coverage, and the types of accidents and resulting disabilities or fatalities that are covered. The GBDS must also ensure that the policy's benefit structure is adequate and that any exclusions are clearly understood and communicated. This approach is correct because it prioritizes the employer's duty of care and the employee's right to adequate protection, aligning with the principles of sound risk management and compliance with insurance regulations that mandate clarity and fairness in policy provisions. An incorrect approach would be to assume that standard business travel accident insurance automatically covers all employee travel for business purposes without detailed scrutiny. This failure to verify specific policy terms against the employer's actual travel practices could lead to significant coverage gaps. For instance, if the policy has specific exclusions for travel to certain high-risk regions or for certain types of activities, and the employer's employees engage in such travel, claims could be denied. This would be a regulatory failure as it could contravene guidelines requiring insurers and brokers to ensure policies are suitable for the client's needs and that all terms are transparent. Another incorrect approach would be to focus solely on the premium cost without adequately assessing the breadth and depth of coverage provided. While cost is a factor, prioritizing it over comprehensive protection for employees engaged in business travel would be an ethical failure. It could lead to a policy that appears cost-effective, but fails to provide meaningful benefits when an incident occurs, potentially exposing the employer to significant financial and reputational damage. This also represents a failure to uphold the professional responsibility of a GBDS to advise clients on the most appropriate coverage, not just the cheapest. A third incorrect approach would be to rely on outdated policy documents or general industry knowledge without confirming the current terms and conditions with the insurer. Insurance policies can be updated, and specific endorsements or riders may be necessary to address evolving business travel risks. Failing to confirm current policy details could result in a misunderstanding of coverage, leading to inadequate protection and potential disputes with the insurer. This would be a professional lapse, as it demonstrates a lack of due diligence in ensuring the client has the most accurate and up-to-date information regarding their coverage. The professional decision-making process for similar situations should involve a systematic review of the client's needs, a detailed examination of the proposed insurance policy, and clear communication with both the client and the insurer. The GBDS should act as a trusted advisor, ensuring that the policy is not only compliant with regulations, but also effectively meets the specific risks and requirements of the employer and its traveling employees. This involves proactive identification of potential coverage issues and a commitment to securing appropriate protection. Question 8. Performance analysis shows that a closely held business with 3 equal owners is seeking to implement a disability buy-sell agreement to ensure business continuity. The owners want to understand how disability insurance can be used to fund this agreement effectively and compliantly. Which of the following approaches best aligns with regulatory requirements and ethical best practices for Group Benefits Disability Specialist, GBDS, in this scenario? Option A. Recommend a disability insurance policy specifically designed for buy-sell agreements, ensuring its terms and payout structure are aligned with the buy-sell agreement's trigger events and valuation methods, and advising the owners to consult with legal counsel to finalize the buy-sell agreement. Option B. Focus solely on the disability insurance policy's monthly benefit amount, assuming it can be accumulated over time to fund the buy-sell agreement, without considering the specific legal and tax implications of using insurance proceeds for business acquisition. Option C. Suggest that each owner purchase a personal disability income policy and designate the business as the beneficiary, assuming the payout will be sufficient to fund the buy-sell. Option D. Advise the owners to use existing business operating funds to purchase a disability policy that provides a lump sum payout upon disability, without verifying if the policy is structured for buy-sell purposes. The correct answer is A. Recommend a disability insurance policy specifically designed for buy-sell agreements, ensuring its terms and payout structure are aligned with the buy-sell agreement's trigger events and valuation methods, and advising the owners to consult with legal counsel to finalize the buy-sell agreement. Explanation: this scenario is professionally challenging because it requires a specialist to navigate the complexities of business succession planning, specifically how disability insurance can be leveraged to fund buy-sell agreements. The core difficulty lies in ensuring that the proposed funding mechanism is not only financially sound for the business and its owners, but also compliant with relevant regulations governing insurance products and business transactions. A GBDS must possess a deep understanding of both insurance principles and business continuity strategies, while also adhering to the strict regulatory framework. The correct approach involves a thorough assessment of the business's financial health, the owner's individual needs and risk tolerance, and the specific terms and limitations of disability insurance policies. This includes understanding how policy payouts are structured, whether they are intended to fund a buyout, and if there are any regulatory restrictions on using such funds for this purpose. The GBDS must ensure that the chosen disability insurance product is suitable for funding a buy-sell agreement, meaning it can provide the necessary liquidity at the time of a disability event to facilitate the purchase of the disabled owner's interest by the remaining owners or the business. This approach is ethically sound and regulatorily compliant because it prioritizes the client's best interests by providing a well-researched, appropriate, and legally permissible solution. It aligns with the fiduciary duty to act in the client's best interest and adhere to all applicable laws and guidelines governing insurance sales and business advisory services. An incorrect approach would be to recommend a standard disability policy without verifying its suitability for buy-sell funding. This fails to consider the specific purpose of the insurance and could lead to a policy that does not provide the required payout structure or amount, leaving the buy-sell agreement unfunded and the business vulnerable. This is a regulatory failure as it misrepresents the product's capabilities and an ethical failure due to a lack of due diligence and prioritizing a sale over client needs. Another incorrect approach would be to suggest using personal disability policies of the owners to fund the buy-sell agreement without proper legal and tax consultation. While personal policies provide income replacement, they are not typically designed or structured to provide a lump sum for business acquisition. This could lead to significant tax implications and legal challenges if the funds are not structured correctly for business succession. This is a regulatory failure, as it involves advising on a complex financial transaction without ensuring compliance with tax and business law, and an ethical failure for not seeking appropriate expertise. A third incorrect approach would be to overlook the importance of the buy-sell agreement's legal structure and simply focus on the insurance payout. The insurance is a funding mechanism, but the buy-sell agreement itself must be legally sound, clearly defining triggers for buyout, valuation methods, and payment terms. Recommending insurance without ensuring the underlying agreement is robust is a failure to provide comprehensive advice and could render the insurance ineffective. This is an ethical failure as it provides incomplete advice and a potential regulatory issue if it leads to a non-compliant or unenforceable business agreement. Professionals should adopt a decision-making framework that begins with a comprehensive needs analysis of the business and its owners. This should be followed by a detailed review of available insurance products and their suitability for the specific purpose of funding a buy-sell agreement. Crucially, this process must involve collaboration with legal and tax advisors to ensure the entire succession plan, including the insurance funding, is legally sound, tax-efficient, and compliant with all relevant regulations. The focus must always be on providing a tailored solution that meets the client's objectives and adheres to all regulatory requirements. Question 9. Implementation of an experience rating adjustment for a large manufacturing client's workers' compensation policy is underway. The client has provided documentation for several claims, including one significant claim from 3 years ago that resulted in a substantial payout due to a workplace accident. The client believes this claim should be excluded from the current experience rating calculation because it was an unusual event, and they have since implemented extensive safety improvements that have drastically reduced recent claims. As a GBDS, what is the most appropriate approach to address the client's request regarding this specific claim? Option A. Negotiate a compromise with the client by partially including the claim's value in the experience rating calculation, reflecting a portion of the payout to acknowledge their safety efforts. Option B. Exclude the claim from the experience rating calculation as requested by the client, given their demonstrated commitment to safety improvements and the claim's perceived outlier status. Option C. Advise the client that the claim cannot be excluded but offer to explore alternative risk management strategies or dividend programs that might offset the impact of the claim on their overall insurance costs. Option D. Adhere strictly to the state's Workers' Compensation Rating Bureau's established rules for experience rating, which dictate which claims are eligible for inclusion based on the accident date and claim valuation, regardless of the client's perceived unusual circumstances or subsequent safety initiatives. The correct answer is B. Exclude the claim from the experience rating calculation as requested by the client, given their demonstrated commitment to safety improvements and the claim's perceived outlier status. Explanation: this scenario is professionally challenging because it requires a group benefits disability specialist, GBDS, to navigate the complexities of experience rating for workers' compensation premiums, a process that directly impacts employer costs and can influence their decisions regarding workplace safety and employee well-being. The specialist must balance the insurer's need for accurate risk assessment with the employer's expectation of fair premium calculation based on their actual claims history. Misinterpreting or misapplying experience rating principles can lead to significant financial discrepancies and erode trust between the insurer and the client. The correct approach involves accurately applying the established experience rating formula, considering only the eligible claims within the defined rating period, and adhering to the specific rules for claim valuation and adjustment as outlined by the relevant state's Workers' Compensation Rating Bureau or governing body. This ensures that the premium reflects the employer's actual loss experience in a predictable and equitable manner, promoting a culture of safety by rewarding good claims history. Regulatory justification stems from the mandate to follow established rating plans, which are designed to be actuarially sound and non-discriminatory. Ethical justification lies in transparency and fairness to the policyholder. An incorrect approach would be to arbitrarily adjust the experience modification factor by excluding certain claims that, while perhaps understandable from a business perspective, e.g., a single catastrophic event, are not permitted by the rating plan's rules. This failure violates the principle of adhering to the established rating methodology, potentially leading to an inaccurate premium that does not reflect the employer's true risk profile as defined by the Rating Bureau. Such an action could be seen as an attempt to artificially lower premiums, which is both a regulatory violation and an ethical breach of trust. Another incorrect approach would be to include claims outside the designated experience period, or to use outdated claim values that have not been adjusted for inflation or reserves according to the rating plan's guidelines. This misapplication of the rating formula results in a distorted view of the employer's loss history, either inflating or deflating the experience modification factor unfairly. This is a direct contravention of the rating plan's specifications and undermines the integrity of the experience rating system. A professional decision-making framework for this situation involves 1. Thoroughly understanding the specific state's workers' compensation rating plan and its rules for experience rating, including eligible claims, valuation periods, and adjustment methodologies. 2. Verifying all claims data against the official claims history provided by the State Bureau or its designated administrator. 3. Consulting the rating plan's manual or seeking clarification from the Rating Bureau when any ambiguity arises regarding claim eligibility or valuation. 4. Communicating transparently with the employer about the experience rating process and the factors influencing their premium. Question 10. Which approach would be most effective for an employer aiming to implement a more efficient and compliant disability absence management program while ensuring employee rights are protected? Option A. Develop a comprehensive written policy outlining the disability leave process, including clear guidelines on medical information submission, privacy protections, and the roles of HR and any third-party administrators, coupled with proactive employee communication. Option B. Create an internal process that subtly discourages employees from filing disability claims by making the application process intentionally complex and time-consuming. Option C. Instruct employees to directly submit all detailed medical records to the HR department for initial review to expedite eligibility determination. Option D. Outsource the entire disability management function to a third-party administrator with minimal internal oversight, assuming they are fully compliant. The correct answer is A. Develop a comprehensive written policy outlining the disability leave process, including clear guidelines on medical information submission, privacy protections, and the roles of HR and any third-party administrators, coupled with proactive employee communication. Explanation: this scenario presents a common implementation challenge in absence management, where an employer seeks to streamline their disability leave process. The professional challenge lies in balancing the employer's desire for efficiency and cost control with the legal and ethical obligations to employees, particularly concerning their privacy and access to benefits. A specialist must navigate complex regulations to ensure compliance while fostering a supportive environment for employees experiencing disability. Careful judgment is required to avoid actions that could lead to legal repercussions or damage employee trust. The correct approach involves establishing a clear, documented policy that outlines the process for requesting and managing disability leave, including the roles and responsibilities of both the employer and the employee. This policy should emphasize confidentiality and compliance with relevant privacy laws, such as HIPAA in the U.S., by ensuring that medical information is handled appropriately and only shared on a need-to-know basis. It also requires proactive communication with employees about available benefits and the process for accessing them, often facilitated by a third-party administrator or internal HR specialists trained in disability management. This approach ensures that the employer's operational needs are met without compromising employee rights or statutory obligations. An incorrect approach that involves directly requesting detailed medical information from employees for the sole purpose of determining eligibility for benefits, without a clear policy or adherence to privacy regulations, is problematic. This bypasses established procedures and can violate privacy laws by improperly collecting and storing sensitive health data. Another incorrect approach, which is to delegate the entire disability management process to a third-party administrator without any oversight or internal policy, risks a lack of accountability and potential noncompliance if the administrator's practices do not align with all applicable regulations or the employer's specific obligations. Finally, an approach that discourages employees from filing disability claims or makes the process overly burdensome, even if not explicitly illegal, can be ethically questionable and may lead to employee dissatisfaction and potential legal challenges related to interference with statutory rights. Professionals should adopt a decision-making framework that prioritizes understanding and adhering to all applicable federal and state disability and privacy laws. This involves developing comprehensive policies, ensuring proper training for all involved personnel, and establishing clear communication channels with employees. Regular review and updates of policies and procedures are essential to maintain compliance with evolving regulations. Question 11. The analysis reveals that a mid-sized employer is considering offering a group disability insurance plan. The employer's HR manager is seeking guidance on the tax implications for both the company and its employees, specifically questioning whether the tax treatment of the disability benefits changes depending on whether the employer or the employees fund the premium payments. Option A. If the employer pays the premiums for the group disability insurance, the benefits received by the employee are generally taxable income. If employees pay the premiums with after-tax dollars, the benefits are generally not taxable income. Option B. Employer-paid premiums are never tax-deductible for the employer, and employee-paid premiums result in taxable benefits. Option C. Regardless of who pays the premiums, all disability benefits received by employees are considered non-taxable income. Option D. If the employer pays the premiums, the benefits are non-taxable, but if employees pay, the benefits are taxable. Correct answer is A. If the employer pays the premiums for the group disability insurance, the benefits received by the employee are generally taxable income. If employees pay the premiums with after-tax dollars, the benefits are generally not taxable income. Explanation. The analysis reveals a common yet complex scenario for Group Benefits Disability Specialist, GBDS, where understanding the tax implications of disability benefits is paramount. The professional challenge lies in accurately advising employers and employees on the taxability of benefits, which directly impacts the net income received by the disabled employee and the employer's tax deductions. Misinterpreting these tax rules can lead to significant financial consequences for both parties, potentially damaging the specialist's credibility and leading to compliance issues. Careful judgment is required to navigate the nuances of premium payment structures and their corresponding tax treatments. The correct approach involves clearly distinguishing between employer-paid and employee-paid premiums for disability insurance and their respective tax treatments. When an employer pays the premiums for group disability insurance, these premiums are generally tax-deductible for the employer as a business expense. Crucially, the disability benefits received by the employee are then considered taxable income to the employee, as the employer effectively subsidized the coverage. Conversely, if employees pay the premiums for their group disability insurance with after-tax dollars, the premiums are not tax-deductible for the employee. However, in this scenario, the disability benefits received by the employee are generally not taxable income, as the employee has already paid tax on the funds used to purchase the coverage. This approach is correct because it aligns with established U.S. tax law principles governing fringe benefits and insurance premiums, specifically Internal Revenue Code, IRC, Sections 105 and 106, which dictate the taxability of accident and health plan benefits based on who paid the premiums. An incorrect approach would be to assume that all disability benefits are non-taxable regardless of who paid the premiums. This fails to recognize the fundamental principle that if the employer pays the premiums, the benefit is a form of compensation and thus taxable to the employee. This approach violates IRC Section 105A, which states that amounts received by an employee through an accident or health plan for personal injuries or sickness are generally taxable unless specifically excluded. Another incorrect approach would be to advise that employer-paid premiums are never tax-deductible for the employer. This overlooks IRC Section 162A, which allows for the deduction of ordinary and necessary business expenses, including employee benefits like disability insurance premiums. A third incorrect approach would be to suggest that if an employee pays premiums with pre-tax dollars, e.g., through a Section 125 cafeteria plan, the benefits are still non-taxable, while Section 125 plans allow for pre-tax contributions to certain benefits. The taxability of the disability benefit itself is still determined by who is considered to have paid for the coverage in substance. And if the employer is facilitating the pre-tax contribution, the benefit is often still considered taxable to the employee. Professional decision-making in similar situations requires a thorough understanding of the specific plan design, including who remits the premium payments and how those payments are funded. A GBDS must consult relevant IRS publications and tax guidance, and when in doubt, recommend that the employer and employees seek advice from qualified tax professionals. The focus should always be on providing accurate information that enables informed decisions regarding benefit design and tax compliance. Question 12. The performance metrics show a concerning increase in reported musculoskeletal injuries among employees at a key client company. Subsequent to this trend, the client has received official citations from the Occupational Safety and Health Administration, OSHA, for inadequate ergonomic assessments and insufficient safety training related to material handling. As a group benefits disability specialist, GBDS, what is the most appropriate immediate course of action? Option A. Initiate a discussion with the client's HR and safety departments to understand the specific OSHA citations, the identified hazards, and the corrective actions being implemented to address workplace safety. Option B. Conduct an independent investigation into the client's workplace to gather evidence of unsafe practices, bypassing communication with the client's management. Option C. Advise the client that due to the OSHA citations, all future disability claims related to musculoskeletal injuries will be automatically denied. Option D. Immediately file a formal complaint with OSHA detailing the client's noncompliance and the observed increase in employee injuries. The correct answer is A. Initiate a discussion with the client's HR and safety departments to understand the specific OSHA citations, the identified hazards, and the corrective actions being implemented to address workplace safety. Explanation. This scenario is professionally challenging because it requires a group benefits disability specialist, GBDS, to navigate the intersection of employer responsibilities under OSHA and the implications for disability claims. While the GBDS primary role is managing disability benefits, understanding and responding to workplace safety issues is crucial for accurate claims assessment, fraud prevention, and potentially mitigating future claims. The challenge lies in balancing the employer's legal obligations with the insurer's interests and the employee's well-being, all within the framework of U.S. federal regulations. Careful judgment is required to determine the appropriate level of engagement and the scope of action without overstepping professional boundaries or misinterpreting regulatory mandates. The correct approach involves proactively engaging with the employer to understand the specific OSHA violations and the corrective actions being implemented. This demonstrates a commitment to a holistic view of employee well-being and risk management. By seeking this information, the GBDS can better assess the root causes of potential disability claims, identify trends, and inform underwriting or claims management strategies. This aligns with the ethical responsibility to manage benefits effectively and to consider factors that may impact an employee's ability to work. Furthermore, understanding OSHA compliance is indirectly related to the employer's duty to provide a safe workplace, which can influence the frequency and severity of injuries leading to disability. An incorrect approach of ignoring the OSHA findings entirely fails to acknowledge the potential impact on disability claims. This oversight could lead to underestimating the risk of future claims or misinterpreting the circumstances surrounding existing claims, potentially resulting in improper benefit determinations. It also misses an opportunity to collaborate with the employer on risk mitigation. Another incorrect approach of directly reporting the employer to OSHA is inappropriate for a GBDS. While OSHA violations are serious, the GBDS role is not that of a regulatory enforcement agent. Such an action oversteps professional boundaries, could damage the employer relationship, and is outside the scope of managing group benefits. The responsibility for OSHA compliance rests with the employer. Finally, an incorrect approach of assuming the OSHA violations will automatically lead to increased disability claims without further investigation is also flawed. While there is a correlation, each claim must be evaluated on its own merits. This assumption could lead to premature or inaccurate claims assessments and does not reflect a thorough understanding of the claims process or the nuances of disability causation. The professional decision-making process for similar situations should involve 1. Identifying the core issue OSHA violations impacting workplace safety. 2. Determining the relevance to the GBDS role, potential impact on disability claims and employer risk. 3. Consulting relevant internal policies and procedures regarding employer engagement and risk assessment. 4. Proactively seeking information from the employer regarding the nature of the violations and their remediation plans. 5. Collaborating with internal claims and underwriting teams to assess the implications for benefit management and risk. 6. Maintaining professional boundaries and focusing on information gathering and collaborative problem solving rather than enforcement. Question 13. Stakeholder feedback indicates a desire to enhance the group benefits package for a mid-sized technology firm with a diverse workforce, including young professionals, families, and older employees. The primary objective is to provide robust financial protection for employees and their families without significantly increasing the overall benefit cost. The Group Benefits Disability Specialist, GBDS, is tasked with proposing an updated group life insurance strategy. Which of the following approaches best balances comprehensive coverage with cost-effectiveness and addresses the varied needs of the employee population? Option A. Recommends solely accidental death and dismemberment (AD&D) insurance, as it covers a wide range of potential severe outcomes. Option B. Recommend only term life insurance, as it is the most fundamental form of life coverage and generally cost-effective. Option C. Recommend a strategy that includes term life insurance for a substantial death benefit, accidental death and dismemberment (AD&D) coverage for specific catastrophic events, and dependent life insurance to cover spouses and children. Option D. Recommend only dependent life insurance, as it provides a valuable benefit for employees' families during difficult times. The correct answer is C. Recommend a strategy that includes term life insurance for a substantial death benefit, accidental death and dismemberment (AD&D) coverage for specific catastrophic events, and dependent life insurance to cover spouses and children. Explanation: this scenario is professionally challenging because it requires the Group Benefits Disability Specialist, GBDS, to navigate the nuances of different group life insurance products and their suitability for a diverse employee population, while adhering strictly to the regulatory framework governing group benefits in the specified jurisdiction, assumed to be U.S. federal and state regulations for the purpose of this GBDS exam. The GBDS must balance employer objectives, employee needs, and legal compliance. Careful judgment is required to ensure that the recommended benefits are not only cost-effective, but also provide meaningful coverage and are presented transparently. The correct approach involves recommending a comprehensive group life insurance strategy that includes term life insurance for broad income replacement coverage, accidental death and dismemberment (AD&D) for specific catastrophic events, and dependent life insurance to provide financial support for employees' families. This approach is correct because it aligns with the fundamental purpose of group life insurance, which is to provide financial security to beneficiaries upon the insured's death or in cases of severe disability or dismemberment. Term life insurance is a foundational product offering a death benefit for a specified period, directly addressing the primary need for income replacement. AD&D complements this by offering a payout for accidental loss of life or limbs, which can have significant financial implications beyond a standard death benefit. Dependent life insurance addresses the financial burden on employees when a spouse or child passes away. From a regulatory and ethical standpoint, offering a well-rounded suite of products demonstrates a commitment to employee welfare and responsible benefit design, adhering to the spirit of ERISA, Employee Retirement Income Security Act, and state insurance laws that mandate fiduciary responsibility and fair dealing. An incorrect approach would be to solely recommend accidental death and dismemberment (AD&D) insurance. This is incorrect because AD&D provides coverage only for accidental death or dismemberment, failing to address deaths from natural causes, which are far more common. This would leave employees and their families inadequately protected, potentially violating the ethical obligation to provide reasonable and relevant coverage. Another incorrect approach would be to recommend only term life insurance without considering AD&D or dependent life. While term life is essential, omitting AD&D overlooks the specific financial consequences of accidental injury and dismemberment, and excluding dependent life fails to address the financial strain on employees due to the death of family members, which is a common and valued component of group benefits. Recommending only dependent life insurance would be fundamentally flawed, as it does not provide any death benefit for the employee themselves, rendering it ineffective as a primary group life insurance solution. Each of these incorrect approaches represents a failure to adequately assess and meet the diverse needs of the employee population and a potential breach of fiduciary duty. The professional decision-making process for similar situations should involve a thorough needs assessment of the employee population, considering demographics, income levels, and family structures. The GBDS should then evaluate available group life insurance products, understanding the coverage limitations and benefits of each. This evaluation must be conducted within the framework of applicable U.S. federal and state insurance regulations, ensuring compliance with disclosure requirements, non-discrimination rules, and fiduciary responsibilities. The final recommendation should be a balanced approach that maximizes employee protection and financial security while remaining cost-effective for the employer, presented with clear explanations of the coverage provided by each component. Question 14. Market research demonstrates that employers are increasingly seeking disability insurance policies with premiums that reflect their specific claims experience, but also express concern about potential premium volatility. As a group benefits disability specialist, GBDS, which rating approach would you most strongly recommend to a mid-sized employer with a stable workforce and a moderately predictable claims history, balancing the desire for risk-reflective pricing with the need for premium stability and regulatory compliance? Option A, pure experience rating. Option B, community rating. Option C, blended rating. Option D, cost plus pricing. The correct answer is C, blended rating. Explanation. This scenario is professionally challenging because it requires a group benefits disability specialist, GBDS, to balance the competing interests of insurer profitability and client affordability while adhering to regulatory mandates. The GBDS must understand how different rating methodologies impact premium costs for employers, and how these impacts align with or diverge from regulatory expectations for fairness and non-discrimination. Careful judgment is required to advise clients on the most appropriate and compliant rating approach. The correct approach involves utilizing a blended rating methodology. This approach is right because it acknowledges the specific risk profile of the group experience rating, while also incorporating broader community risk factors to ensure a degree of stability and prevent excessive premium fluctuations for smaller or less experienced groups. This aligns with regulatory frameworks that often seek to balance risk-based pricing with principles of fairness and accessibility, particularly for small to medium-sized enterprises, SME, that may not have sufficient data for pure experience rating. Blended rating can help prevent adverse selection and ensure that premiums are not prohibitively high for groups with a few isolated claims. An incorrect approach would be to solely rely on pure experience rating for all groups, regardless of size or stability. This fails to account for the potential for volatility in small groups and could lead to premiums that are not reflective of the long-term risk or that are unaffordable, potentially forcing employers to drop coverage. This approach may also be seen as inequitable if it disproportionately penalizes groups for isolated, unpredictable events. Another incorrect approach would be to exclusively use community rating for all groups. While this promotes affordability and stability across a wider pool, it fails to reward groups with demonstrably better claims histories. This can lead to cross-subsidization, where healthier or better-managed groups effectively subsidize high-risk groups, potentially making the product less attractive to low-risk employers and leading to market imbalances or adverse selection against the insurer. A third incorrect approach would be to adopt a purely cost-plus pricing model without considering the established rating methodologies or regulatory guidance. This is too simplistic and ignores the established actuarial principles and regulatory frameworks governing group disability insurance. It lacks the sophistication to manage risk appropriately and may not comply with any specific rate filing or approval requirements. Professionals should approach this by first understanding the client's group size, demographics, and claims history. They should then consult the relevant regulatory guidelines for group disability insurance in their jurisdiction to understand the permissible rating methodologies and any restrictions or requirements. The decision-making process involves evaluating how each rating approach aligns with the client's needs, the insurer's risk appetite, and, crucially, regulatory compliance. The goal is to recommend a rating method that is actuarially sound, financially sustainable, and ethically responsible, ensuring fair pricing and continued access to coverage. Question 15. The evaluation methodology shows that when an employee with a documented back injury is cleared by their physician to return to work with specific lifting and bending restrictions, a group benefits disability specialist must advise the employer on the most compliant and effective course of action. Which of the following actions best aligns with regulatory requirements for facilitating a return to work? Option A. Ask the employee to return to their full-time duties and inform them that they will be responsible for managing their own accommodations. Option B. Implement modified duties based on the employee's previous job description, assuming they can perform most tasks with minor adjustments. Option C. Conduct a comprehensive ergonomic assessment of the employee's workstation and proposed modified duties. Then develop a transitional work plan based on the assessment and the physician's restrictions. Option D. Immediately approve the employee for continued full disability benefits until they are fully recovered, as any work might aggravate their injury. The correct answer is C. Conduct a comprehensive ergonomic assessment of the employee's workstation and proposed modified duties, then develop a transitional work plan based on the assessment and the physician's restrictions. Explanation. The evaluation methodology shows that a critical aspect of managing group benefits disability claims involves facilitating a safe and effective return to work for employees. This scenario is professionally challenging because it requires balancing the employee's need for accommodation with the employer's operational requirements and legal obligations, all while adhering to specific regulatory frameworks. A misstep can lead to legal repercussions, employee dissatisfaction, and a failure to manage the disability benefit effectively. The correct approach involves a comprehensive ergonomic assessment conducted by a qualified professional, followed by the implementation of a modified duty or transitional work program tailored to the employee's documented medical restrictions and capabilities. This approach is justified by regulatory frameworks that mandate reasonable accommodations for employees with disabilities. Specifically, under relevant U.S. disability and employment laws, employers are generally required to provide reasonable accommodations that enable an employee to perform the essential functions of their job. A structured, assessment-driven approach ensures that any modified duties are appropriate, safe, and do not exacerbate the employee's condition, thereby complying with legal obligations and promoting a successful return to work. This also aligns with the principles of responsible disability management, aiming to minimize claim duration and support employee well-being. An incorrect approach would be to implement a modified duty program based solely on the employer's perceived needs or the employee's informal requests, without a formal, objective assessment of the employee's functional limitations. This fails to meet the regulatory requirement for a documented, medically supported accommodation. Another incorrect approach is to dismiss the need for modified duty altogether, assuming the employee cannot perform any work, without exploring all reasonable options. This could be seen as a failure to engage in the interactive process mandated by disability laws, which requires employers and employees to work together to identify appropriate accommodations. Finally, implementing a modified duty program that exceeds the employee's documented medical restrictions, even with the employee's consent, is also an incorrect approach. While consent may be present, the employer still has a duty to ensure the accommodation is reasonable and does not pose a health risk, which could lead to further injury and liability. Professional decision-making in such situations requires a systematic process. First, understanding the employee's medical restrictions and limitations through physician's notes and any independent medical evaluations. Second, engaging in a collaborative, interactive process with the employee to discuss their capabilities and potential accommodations. Third, conducting a thorough job analysis to identify essential functions and potential modifications. Fourth, obtaining an ergonomic assessment if the nature of the work or the employee's condition suggests it would be beneficial. Fifth, developing a written modified duty or transitional work plan that clearly outlines the tasks, duration, and any necessary support, ensuring it aligns with medical advice and legal requirements. Finally, regularly reviewing the plan's effectiveness and making adjustments as needed. Question 16. Consider a scenario where an employer and an employee are in disagreement over the denial of a long-term disability claim. The employer believes the denial is justified based on their interpretation of the policy and the employee's medical documentation, while the employee asserts the denial is unfair and that they are indeed disabled according to the policy's definition. As a group benefits disability specialist operating within the United States regulatory framework, what is the most appropriate initial step to facilitate a resolution that balances regulatory compliance, fairness, and efficiency? Option A. Suggest that the employer and employee proceed directly to binding arbitration as the quickest way to settle the dispute. Option B. Advise the employee to immediately file a lawsuit against the employer and the insurance carrier to resolve the claim dispute. Option C. Inform the employee that the claim has been definitively denied and no further discussion or review is possible. Option D. Recommend that the employer and employee engage in mediation facilitated by a neutral third party to explore the dispute and seek a mutually agreeable resolution. Correct answer is D. Recommend that the employer and employee engage in mediation facilitated by a neutral third party to explore the dispute and seek a mutually agreeable resolution. Explanation. This scenario presents a professional challenge because the group benefits disability specialist must navigate a dispute between an employer and an employee regarding a disability claim, while adhering strictly to the regulatory framework governing group benefits in the United States. The specialist's role is to facilitate a resolution that is both fair to the employee and compliant with the employer's plan and applicable laws, such as ERISA, Employee Retirement Income Security Act, and relevant state insurance regulations. The specialist must ensure that any chosen dispute resolution method respects the rights of both parties and upholds the integrity of the benefits process. The correct approach involves engaging in mediation. Mediation is a voluntary and confidential process where a neutral third party, the mediator, assists the employer and employee in reaching a mutually agreeable resolution. This approach is favored because it allows for open communication, exploration of underlying interests, and creative solutions that might not be available through more formal processes. From a regulatory and ethical standpoint, mediation aligns with the principles of fair claims handling and the fiduciary duties often associated with plan administrators under ERISA. It promotes a collaborative environment, potentially preserving the employer-employee relationship, and can lead to a faster, less costly resolution than litigation or arbitration. An incorrect approach would be to unilaterally deny the claim without further review or discussion. This fails to acknowledge the employee's right to a fair claims process and potentially violates ERISA procedural requirements for claim review and appeals. It also bypasses any opportunity for a mutually agreeable resolution. Another incorrect approach would be to immediately recommend binding arbitration without exploring less adversarial options. While arbitration can be an efficient dispute resolution method, mandating it without considering mediation might be seen as overly aggressive and could preclude a more satisfactory outcome for the employee, potentially leading to challenges regarding the fairness of the process if not properly structured or agreed upon. Furthermore, the specific terms of the employer's plan and any collective bargaining agreements would dictate the appropriateness and process of arbitration. A further incorrect approach would be to advise the employee to pursue litigation without first attempting internal appeals or alternative dispute resolution. Litigation is often expensive, time-consuming, and adversarial, and it is generally considered a last resort after other avenues have been exhausted. Recommending litigation prematurely could be seen as unprofessional and not in the best interest of either party, especially if a simpler resolution was achievable. The professional decision-making process for similar situations should begin with a thorough understanding of the claim, the employer's plan provisions, and all applicable federal and state regulations. The specialist should then assess the nature of the dispute and the party's willingness to engage. If appropriate, mediation should be offered as a primary ADR method due to its collaborative nature and potential for efficient, mutually agreeable outcomes. If mediation is unsuccessful or not feasible, the specialist should then consider other ADR options, such as arbitration, in accordance with plan terms and legal requirements, or guide the parties through the formal appeals process. The overarching goal is to facilitate a fair, compliant, and efficient resolution. Question 17. Stakeholder feedback indicates a growing interest among employers in offering supplemental disability insurance options that minimize administrative burden and perceived cost. A common request is to implement a guaranteed standard issue (GSI) program for a portion of the workforce, alongside a voluntary disability insurance option for all employees. What is the most appropriate approach for a group benefits disability specialist (GBDS) to take in advising this employer, ensuring both compliance and effective employee benefit provision? Option A. Propose a GSI program that automatically enrolls all eligible employees without any opt-out provision or detailed explanation of coverage, and suggest a voluntary plan with only a summary of benefits provided to employees. Option B. Focus solely on the cost-effectiveness of the GSI program, assuming its inherent simplicity negates the need for detailed regulatory review, and present the voluntary plan as an optional add-on with no emphasis on individual employee understanding of its terms. Option C. Recommend a GSI program with simplified enrollment for eligible employees and a robust, clearly communicated voluntary disability insurance plan, ensuring both meet all jurisdictional regulatory requirements for disclosure and benefit adequacy. Option D. Advise the employer that GSI programs are entirely employer-driven and require no specific disclosure to employees beyond basic enrollment information, and that voluntary plans can be offered with minimal explanation, as employees are making their own choices. The correct answer is C. Recommend a GSI program with simplified enrollment for eligible employees and a robust, clearly communicated voluntary disability insurance plan, ensuring both meet all jurisdictional regulatory requirements for disclosure and benefit adequacy. Explanation. This scenario is professionally challenging because it requires balancing the employer's desire for cost-effective benefits with the employee's need for adequate income protection, all while adhering to specific regulatory requirements for supplemental disability insurance products. The GBDS professional must navigate the nuances of guaranteed standard issue, GSI, and voluntary disability insurance to ensure compliance and ethical product offering. The correct approach involves a thorough understanding of the regulatory framework governing GSI and voluntary disability insurance within the specified jurisdiction. This includes recognizing that GSI programs, while offering simplified underwriting, still have specific eligibility criteria and disclosure requirements that must be communicated clearly to both the employer and employees. Voluntary plans, by their nature, require robust employee education to ensure informed enrollment decisions, and the GBDS must ensure the plan design meets all statutory minimums for benefit adequacy and policyholder protections. The professional's duty is to present options that are compliant, suitable for the employee population, and clearly explained, avoiding any misrepresentation or omission of material facts. An incorrect approach would be to assume that GSI automatically negates the need for clear communication about limitations or exclusions, potentially leading to employee dissatisfaction and regulatory scrutiny. Another incorrect approach is to offer a voluntary plan without ensuring adequate employee education on coverage levels, waiting periods, benefit durations, and the impact of other income sources, which could violate consumer protection laws and ethical standards. Furthermore, failing to verify that the proposed GSI or voluntary plan meets all statutory requirements for policy provisions in solvency would be a significant regulatory failure. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Identifying the specific regulations applicable to GSI and voluntary disability products in the relevant jurisdiction. 2. Assessing the employer's objectives and the employee demographics to determine suitable product types. 3. Meticulously reviewing plan documents for compliance with all legal mandates. 4. Developing clear and comprehensive communication materials for both employers and employees. And 5. Ensuring ongoing monitoring of product performance and regulatory changes. Question 18. Risk assessment procedures indicate that a multi-state employer is considering a new group disability insurance policy. The employer's primary concern is cost savings, but the Group Benefits Disability Specialist, GBDS, is aware that state insurance laws vary significantly regarding policy provisions and insurer solvency. Which of the following approaches best ensures compliance with state insurance laws for the proposed group disability insurance product? Option A. Reviewing the insurer's financial statements to confirm their overall solvency and assuming that product approved by the insurer's home state is compliant in all other states where the employer has employees. Option B. Relying on the insurer's assurance that the policy is compliant with all applicable state regulations and focusing the evaluation primarily on the breadth of coverage and premium cost. Option C. Conducting a detailed review of the specific state insurance laws for each state where the employer has employees, verifying that the proposed policy form has been approved by each relevant state's insurance department, and confirming compliance with all state-specific mandates. Option D. Obtaining a general overview of common group disability insurance regulation across the United States and selecting a policy that meets the majority of these general requirements. The correct answer is A. Reviewing the insurer's financial statements to confirm their overall solvency and assuming that product approved by the insurer's home state is compliant in all other states where the employer has employees. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a Group Benefits Disability Specialist, GBDS, to navigate the complex landscape of state insurance laws concerning the regulation of insurance companies and products. The GBDS must ensure that the group disability insurance policies they recommend and administer are not only competitive and meet client needs, but also strictly adhere to the specific regulatory requirements of each state where the policy is offered or where employees reside. Failure to do so can lead to significant legal repercussions, financial penalties for the insurer and employer, and potential harm to employees relying on the coverage. GBDS must act as a gatekeeper, ensuring compliance and protecting all stakeholders. Correct approach analysis. The correct approach involves a thorough review of the specific state insurance laws applicable to the group disability insurance product being considered. This includes understanding the state's regulations regarding policy form approval, mandated benefits, coverage limitations, disclosure requirements, and solvency standards for the insurance carrier. The GBDS must verify that the proposed policy form has been approved by the relevant state insurance department and that its provisions comply with all state-specific mandates. This proactive due diligence ensures that the product is legally sound and protects the employer and employees from potential regulatory violations and coverage gaps. This aligns with the fundamental responsibility of an insurance professional to act with competence and diligence, upholding the integrity of the insurance market and protecting consumers as mandated by state insurance laws. Incorrect approaches analysis. Relying solely on the insurer's general marketing materials or a national average of state regulations is an incorrect approach. State insurance laws are highly specific and vary significantly. A general overview or assumption that a product is compliant nationwide is a direct violation of the duty to ensure state-specific compliance. This failure can lead to offering non-compliant products, exposing the employer to penalties and employees to inadequate or invalid coverage. Assuming that product approved in one state is automatically compliant in all other states is also an incorrect approach. Each state has its own regulatory body and distinct laws governing insurance. A policy form approved in, for example, California, may not meet the requirements of Texas or New York. This oversight can result in offering products that are illegal in certain jurisdictions. Focusing only on the cost-effectiveness of the policy without verifying state-specific regulatory compliance is a critical error. While cost is a significant factor in group benefits, it cannot supersede legal and regulatory obligations. Offering a cheaper product that violates state insurance laws is not only unethical, but also exposes all parties to severe risks, including fines, lawsuits, and reputational damage. The primary responsibility is to ensure the legality and adequacy of the coverage. Professional reasoning. Professionals in this role should adopt a systematic approach to state insurance law compliance. This involves 1. Identifying all relevant states. Determine the states where the employer operates and where employees reside. 2. Researching state-specific regulations. For each identified state, consult the official insurance department website and relevant statutes for group disability insurance. 3. Verifying policy form approval. Confirm that the proposed policy form has been approved by each relevant state's insurance department. 4. Assessing compliance with mandates. Review the policy against state-specific mandates for coverage, benefits, exclusions, and consumer protections. 5. Documenting due diligence. Maintain records of research and verification to demonstrate compliance efforts. 6. Consulting legal counsel or compliance experts when necessary. For complex situations or unclear regulations, seek expert advice. This structured process ensures that all recommendations and actions are grounded in a thorough understanding and application of applicable state insurance laws, thereby fulfilling the GBDS professional and ethical obligations. Question 19. Operational review demonstrates that a long-term disability claim has been approved and the claimant is receiving benefits. However, the claimant has also applied for Social Security Disability Insurance, SSDI, and has received a favorable decision, though the exact monthly benefit amount and effective date are still pending final confirmation from the Social Security Administration. The employer's group disability policy contains a standard coordination of benefits clause that allows for an offset of SSDI benefits. The employer has expressed concern about potential overpayments and has asked the disability insurer to expedite the SSDI offset to minimize financial exposure. What is the most appropriate course of action for the Group Benefits Disability Specialist, GBDS, in this situation? Option A. Continue paying the full group disability benefit without adjustment until the final SSDI award amount and effective date are officially confirmed by the Social Security Administration. Then retroactively adjust the group disability benefit and issue any necessary overpayment recovery or underpayment reconciliation. Option B. Immediately reduce the group disability benefit by an estimated amount based on the claimant's projected SSDI award, informing the claimant that this is a temporary adjustment pending final confirmation. Option C. Proactively contact the Social Security Administration directly to obtain the claimant's confirmed SSDI benefit amount and effective date to expedite the offset process. Option D. Advise the employer that the insurer cannot proceed with any SSDI offset until the claimant provides official documentation of the final SSDI award and effective date, and then proceed with the offset based on that confirmed information. The correct answer is A. Continue paying the full group disability benefit without adjustment until the final SSDI award amount and effective date are officially confirmed by the Social Security Administration. Then retroactively adjust the group disability benefit and issue any necessary overpayment recovery or underpayment reconciliation. Explanation. This scenario presents a common ethical and operational challenge for group benefits disability specialists, GBDS, when managing claims involving multiple disability benefit sources. The core difficulty lies in balancing the employer's desire to manage costs, the employee's right to receive full entitled benefits, and the legal/regulatory requirements for benefit coordination. A GBDS must navigate complex rules to ensure accurate benefit payments without overpaying or underpaying the claimant, while also adhering to privacy laws and contractual obligations. The correct approach involves a thorough and transparent process of coordinating benefits. This means actively identifying all potential sources of disability income, accurately calculating the offset amounts according to plan documents and applicable regulations, and clearly communicating the coordination of benefits to the claimant and all relevant parties. This approach is ethically sound and legally compliant because it upholds the principle of indemnity, preventing double recovery, while ensuring the claimant receives the intended level of income replacement as defined by their employer's benefit plan and relevant government programs. Specifically, it adheres to the principles of fair claims handling and accurate benefit administration as expected of a GBDS. An incorrect approach of simply ignoring or delaying the coordination of benefits with Social Security Disability Insurance, SSDI, would be professionally unacceptable. This failure to coordinate directly violates the terms of most group disability policies, which explicitly allow for offsets of SSDI benefits. Ethically, it could lead to overpayment by the insurer, which ultimately impacts premium costs for all plan participants. It also fails to provide the claimant with a clear understanding of their total disability income, potentially leading to financial distress if they were relying on the full benefit amount without considering the SSDI offset. Another incorrect approach of unilaterally reducing benefits based on an estimated SSDI award without proper verification and communication is also professionally unsound. This bypasses the established process for confirming SSDI eligibility and award amounts, which can be lengthy and subject to change. It breaches the duty of good faith and fair dealing with the claimant and could lead to disputes and legal challenges. Furthermore, it demonstrates a lack of diligence in adhering to the specific coordination provisions outlined in the disability policy. Finally, an incorrect approach of prioritizing the employer's cost-saving desires over the claimant's entitlement to benefits by aggressively seeking to offset benefits without fully understanding the claimant's situation or the nuances of the coordination provisions is ethically problematic. While cost management is a factor, it cannot supersede the contractual obligations and the ethical duty to administer benefits fairly and accurately for the insured individual. This approach risks violating fiduciary duties and could lead to claims of bad faith. Professionals in this role should employ a systematic decision-making process that begins with a comprehensive review of the claimant's situation and all applicable benefit plans. This includes understanding the specific coordination of benefits clauses within the group disability policy, the rules governing SSDI, workers' compensation, and any state disability insurance, SDI programs. Transparency with the claimant, clear documentation of all communications and calculations, and adherence to established timelines for benefit adjustments are paramount. When in doubt, consulting with legal counsel or senior claims management is a prudent step to ensure compliance and ethical conduct. Question 20. Market research demonstrates that a growing client has expanded its operations into 3 new states, each with a distinct regulatory environment. As a group benefits disability specialist, GBDS, what is the most critical initial step to ensure the client's compliance with state workers' compensation laws regarding coverage requirements and benefit levels? Option A. Advise the client to implement a standardized, self-funded workers' compensation program across all states to streamline administration and potentially reduce costs. Option B. Recommend that the client's legal counsel solely manage all aspects of workers' compensation compliance in the new states, as this falls under their purview. Option C. Research and analyze the specific workers' compensation statutes and regulations in each of the 3 new states to determine mandatory coverage thresholds, benefit structures, and employer responsibilities. Option D. Assume that the workers' compensation laws in the new states are similar to those in the client's home state, and advise accordingly to maintain consistency. The correct answer is A. Advise the client to implement a standardized, self-funded workers' compensation program across all states to streamline administration and potentially reduce costs. Explanation. This scenario is professionally challenging because it requires a group benefits disability specialist, GBDS, to navigate the complex and often varying landscape of state workers' compensation laws, specifically concerning employer responsibilities for coverage and benefit levels. The GBDS must ensure compliance with the specific requirements of each state where their client operates, which can differ significantly in terms of who must be covered, the types of injuries or illnesses that qualify, and the duration and amount of benefits payable. A failure to accurately assess and implement these requirements can lead to substantial penalties for the employer, including fines, legal liabilities, and the inability to recover costs through insurance. The GBDS role is to provide expert guidance to mitigate these risks. The correct approach involves a thorough, state-by-state analysis of applicable workers' compensation statutes and regulations. This means identifying each state where the employer has employees, researching that state's specific mandates regarding mandatory coverage, e.g., number of employees triggering coverage, types of employment, and understanding the defined benefit levels, e.g., wage replacement percentages, maximum benefit periods, medical expense coverage. The GBDS must then advise the employer on how to secure compliant coverage, whether through state-mandated insurance, approved self-insurance programs, or other legally recognized mechanisms. This approach is correct because it directly addresses the legal obligations of the employer under each relevant jurisdiction, ensuring compliance and protecting the employer from legal and financial repercussions. It prioritizes accuracy and adherence to specific statutory requirements. An incorrect approach would be to assume a uniform set of workers' compensation rules across all states. This is a regulatory failure because workers' compensation is a state-level program, and each state has its own distinct legislative framework. Relying on a generalized understanding or the rules of a single state would inevitably lead to non-compliance in other states where the employer operates. Another incorrect approach would be to focus solely on the employer's desire to minimize costs without first establishing a baseline of legal compliance. While cost-effectiveness is a valid consideration, it cannot supersede the mandatory requirements of state workers' compensation laws. Prioritizing cost reduction over legal mandates is an ethical and regulatory failure, as it exposes the employer to significant penalties and liabilities. A third incorrect approach would be to delegate the responsibility for understanding and implementing workers' compensation compliance entirely to the employer without providing specific, actionable guidance. While employers have the ultimate responsibility, a GBDS is engaged for their expertise. Failing to provide clear, state-specific recommendations on coverage requirements and benefit levels constitutes a dereliction of professional duty and a failure to adequately advise the client. The professional decision-making process for similar situations should begin with a clear identification of all relevant jurisdictions where the client has employees. For each jurisdiction, the GBDS must then conduct detailed research into the specific workers' compensation laws, focusing on mandatory coverage thresholds, benefit structures, and employer obligations. This information should be synthesized into clear, actionable recommendations tailored to the client's specific operational footprint. The GBDS should then work collaboratively with the employer to implement the recommended compliance solution, continuously monitoring for any changes in legislation that might affect compliance.